So the stock market narrative has been that the economy is okay and inflation is tamed. And those were both confirmed by the Fed chair yesterday. So let the good times roll. Tesla's new narrative, I think, on the street is that it's an AI company specializing in robotics with the world-leading auto products, growing their leadership with new products and factories on the way. Nothing has changed about that. So let the good times roll. This is Randy Kirk. And, we all needed an optimistic look at things today. But, as I built this little story today, it's really all true. You don't have to be an optimist to believe what I'm going to report on. But tell me where I'm wrong. This is, I like this environment where we have a discussion about these things. So this is one that I need a lot of comments on. So please help me out with comments. Remember that tomorrow I've got Wong on again, and he is going to bring some stuff that's going to blow your mind. So, and we'll talk in a minute about, I'm going to have a personal conversation. I'm going to have a personal conversation with you who enjoy this channel. At the end, we'll have a get together, or just a personal between you and me. All right. Now, there are some rough edges in the business climate right now. There's no doubt about it. But the numbers point to an increasing GDP with no real reasons for a downturn that I can find. Now, that's given current information and no weird wars or pandemics or other kinds of things like that to get in the way. So let's go down a few points here, a bunch of points. I got so many points here. Number one, employment is strong. More confirmation out this morning. The employment is strong. There are plenty of jobs still to be filled. There's not as many as there were, but there's still lots. That's what the Fed chairman said yesterday. You believe him, right? But again, all the stats that I'm seeing say there's still plenty of jobs that need filling. People have work. The unemployment numbers are strong, good, appropriate, well, low. I mean, there's hardly anybody unemployed. Labor force participation is as good as it's been for a very, very long time. So the employment side seems extremely strong. And if you have people working, then you have people spending. They have to spend in order to work, clothes, transportation, eating out at lunch, whatever. So there's expenditures that have to do with work. But then if you're making a good enough amount of money, then you're going to spend it on the things that you need and even the things that you want. So that's the employment numbers. Number two, inflation is coming down rapidly. Everybody agrees with that. The only disagreement is how rapidly. Truflation says that we're about 2.6%. The Fed thinks we're closer to 4%. The PCE next week will be very interesting. And I think we'll find out that it's lower than the Fed thinks and still higher than what Truflation has it. But it will be interesting either way. But it won't be scary. And it won't be indicating that inflation expectations are baked in. The thing the Fed's worried about is that this 4% or whatever the number is baked in, and that people will start making all their decisions based on inflation expectations. That just isn't the case. I think that the expectations right now for most people are that the inflation deal is passé. Yes, we're still going to squawk and be concerned if we pay more at the grocery store, pay more at the gas pump. But I think the overall issue is past. We're done with it. Okay. And number three, interest rates are high, but not historically. I put up that chart on X just a little while ago. Businesses in the past has been I've lived through, you've lived through, most of the people watching this channel right now, most of you have lived through interest rates that were far higher than this. Back in the 80s, 90s, 2000s, it wasn't until 2008 and the housing crisis that we had this drop down to these crazy historically numbers of, 0%, 1%, 2% with mortgage rates at 2 and 3%. I mean, this is nuts. This is not normal. This economy can do just fine with 5% treasuries. It can do just fine with 6 and 7% mortgages. It has done it in the past. It can do it now. It is not going to kill the economy. So I'm sorry, we'll be fine. And so that's interest rates. Yeah, they're high. I don't see them going much higher. And I think we'll be able to live with what they are. And they'll probably start dropping next year, according to the Fed. Number 4, the earnings of the S&P 500 are being revised upward. So this is always a key issue. Where are we with the S&P 500 stocks? Where are we with stock, businesses in general? Well, if the numbers are revised upward, then that would tell you that we're going to be seeing higher numbers on the Dow, on the S&P, etc. All right, number 5, my big, the thing I love to talk about the most, productivity. The productivity expectations are very positive. And I, of course, have been telling you that. I think that we'll be seeing extremely good productivity numbers, and we'll see a little bit of that with the PCE next week. You can infer certain productivity things from the PCE next week. But the reality is that we've got every reason to believe the productivity is going to be extremely strong year-over-year comparisons for the next 3 to 4 quarters at least, and maybe further than that. All right. No, I forgot. I've got dots here instead of numbers, so I don't know what number this is. Residential home prices will continue up regardless of Fed action. It doesn't matter. They can raise it a point. They're not going to. They might raise it 25 basis points. They're not going to raise it 50. They're not going to raise it 100. So we're not going to see massive increases in mortgage rates at this point. We are probably maxed out on mortgages. And every evidence says that we're going to see housing prices go up next year, not over the winter. I'm saying over the winter, we could see some relaxation. And then starting again in the spring, in season, you will see prices going up because there's no inventory. You've heard me. This is I'm just repeating what I've said so frequently. I don't see anything to suggest that this is going to be any different. Oil prices are out of the control of the Fed. The Fed does not control oil prices. Nothing that the Fed can do is going to control oil prices. But having said that, right now, I think they're going to settle out in this range. I think they'll get up to 100, might get up to 105, settle back down 95, maybe even settle in the 80s, but it's going to be in this range. What does that mean? It's baked in at this point. We already know what it's going to be. Do I think it'll go back to 140? Not a chance in the world. There's no way it's going to go to 140 in an election year. The outcry would be, you'd be able to hear it from coast to coast. So no, I think it'll go back in the 80s, but that's me, the optimist. Okay. Either way, it's not going to kill the economy. So there you are. Gas prices will reflect oil prices. I think they're going to settle out a little higher than they are right now. So right now, the low in the country is around $3. Figure that might go to $3.30, $3.50. The high is in California, of course, as always, at $6. Figure that might go to $6.50, $6.60. I think if we get gas prices of $4 in the South and $8 in California, you will have a revolution on your hands. and the powers that be probably won't want that. Okay. Next, consumers are currently driving the economy and have been for 3 years. And they still have plenty of reserves in their bank accounts and credit lines, according to Bank of America, who should know. Okay. And they're saying they have plenty of money in their accounts. I think what's happening is that those consumers are liking having money in their accounts. And so I think that's why we don't see even more spending at this point. I think people have gotten used to the idea of having a buffer and of not being completely out there with regard to their credit cards. And of course, with credit card charges being so high right now, nobody wants to have money in their credit card accounts. So that's how I'm looking at that. The consumers have plenty of money. They're not going to run out of money anytime soon. They say they'll spend less for Christmas. I think that is that conservative consumer I just mentioned that likes having money in their account. Will they spend less for Christmas? That's always the question. Talk is cheap, but people get, they get into the stores and like, oh, Susie wants one of those. Anyway, all right. Businesses have not begun to spend on capital improvements yet. This is very likely to happen soon. Now that the companies can breathe and they can kind of project their sales, they can kind of project that their raw material costs, what their raw material costs are going to be. They can kind of project their labor. Everything is kind of normal now in the business environment. Well, now you can go, okay, what kind of automation can I buy? What kind of services can I get that might get my costs down long term? So I see capital spending on those kinds of things will start to increase shortly. Also, probably more R&D, more expectations of a future that's bright will cause companies to start spending in these areas again. The next one, worries about the office spaces issue in commercial real estate, still not happening. We're not seeing banks, we're not seeing more regional banks in trouble. We're not seeing tons and tons of defaults from commercial real estate owners. Maybe it's still going to come, but it's kind of out of the headlines now. And I don't know what happened to that big, maybe. I said months ago that I thought that owners of that kind of real estate would find ways to solve it. We've seen some ways to solve it. Some of them are being switched over to residential, are being mixed use. There's lots of ways to solve these issues. You can tear them down if you have to and build something else there. But anyway, so far, this has not become a big deal. Worries about auto defaults, also not happening. Are there more than there were? Yes. Is it out of control? Is it crazy? Is it more? No, it's not. Okay. So I don't know. I'm running out of things here. Presidential election year may impact some decisions in the U.S. Capitol, but a split government makes it hard to get anything done in any direction. So I don't see the Republicans being able to win on the issue of bringing down the costs of government. I don't see the Democrats being able to push through any more spending bills. I don't see how anything gets done over the next 12 months, quite frankly. And so that's usually good. I'm usually a guy who likes to see the government all tied up. I think Elon agrees. He likes to see a split government also. So the number one problem that I see for the U.S. economy and for the stock market going forward is debt. I think it's the number one issue, but I don't have any evidence. I can't see any evidence. I can't pinpoint anything that says it is a massive issue yet or likely to be in 2024. I could be completely wrong about that as countries and companies start fighting over available dollars. But then I look at the $5.6 trillion sitting in money market funds, and I'm like, it seems like there's enough money to fund a lot of stuff. So anyway, help me out. What did I miss? Where's the fly in the ointment that will create a recession? Where's the fly in the ointment that will cause a problem in the stock market? Some year-over-year comparisons might make certain months or quarters appear weak compared to this year, but the Goldilocks, to me, still seems to be in control. That would mean that we would have another positive leg coming in the market, and maybe after the PCE next week, we'll see that happen. Or tell me, why not? Maybe you see something major. I'd love to hear that in the comments. All right, now we're going to turn to Tesla. The narrative is that Tesla is a growth company, but maybe they're having a little bit tough with growing at 50%. But they're going to grow at 50%, even though they had to drop some prices to do it. And one after another, analysts are seeing past the current market and past the automotive segment. They understand that the future for Tesla, one after another, analysts are seeing past this current market and past the automotive segment, and they're understanding that the future for Tesla is about much more than just cars. So let's go down the list again. Number one, the Cybertruck launch is seen by many, including me, as a huge boon. Sales, profits, visibility, and adding to the narrative of them being a futuristic company that owns the EV market and is going to own the entire automotive market. As that continues, there's no reason why that's not a huge benefit to Tesla. Number two, the Highland launch in the U.S. should be coming soon, and that should provide increased sales and profits and visibility and people seeing the company as being forward thinking and in control. I just don't know where they're going to add the capacity that they might need in order to make as many as they're going to sell. That's all to be seen. Number three, what is the upgrade in Austin right now? Nobody's talking about what this upgrade is. Why is the entire Model Y line shut down in Austin? Could it be Jupiter? I mean, that just occurred to me. I don't know that it is or think that it is or have any reason to believe that it is, but Elon said the upgrades were easy in the Highland. So why not go ahead, make the upgrades in Model Y That could really help sales in the fourth and first quarters. Next, Optimus enters production, whatever that means, in November. This is huge. If it really happens, if we see some evidence of it, if we see evidence of Optimi doing useful tasks, hopefully many different kinds of useful tasks. And what if we even got a suggestion of what they're going to charge per month for these, or per year, or maybe they're going to sell them outright. I doubt it. But anyway, according to Elon, Optimus enters production in November. It's massive. Next, multiple hints that full self-driving is nearing completion. You may have heard this morning that Larry Ellison, the billionaire who was on the board of Tesla for many years, he said, hey, it's close. And we don't know why he said that. We don't know if he was breaking news. We don't know if he was just talking off the top of his head. But let's just say that even Elon's drive a few weeks ago would give us a great deal of expectation that we are very close on FSD, and that's going to just change everything. All right. Next would be that we're unlikely to see any more cuts in prices. I really don't think you're going to see much more. I think the prices now for the Model Y, the Model 3, even the S and X are now quite in line with competitors in ICE. They are at parity, or they're sometimes under parity. And then when you take into consideration all the discounts that you can get from various governments, the US government, state governments, and foreign governments, when you take all that into consideration, I don't think there's going to be any reason to cut the prices any further. So it's going to be a surprise to me if we see any significant price decreases. We may start to see some slight bumps up in prices. Next, we have almost certainly going to see lower costs of goods. So that means better margins. Battery prices are way down. Commodity prices may be inching up just a little bit, but overall they're way down. And I know that Elon was Tesla was quoted in that report. I forget who it was from last week. It was reported that they said that they don't see a lot of cost of goods benefits coming in the 2024. So I guess they'll see all the major stuff will be in 2023. But they did say that as the Model Y ramps continue in Austin and Berlin, those will result in some very good marginal increases. Significantly tough numbers. Here's the biggest bugaboo. We're gonna get some tough numbers on October 2nd. I gave some revised numbers the other day. I don't remember them off the top of my head, but let's just say they're not going to be great. I think it's all baked into the price. I think it's all baked into people's expectations at this point. And then we go to the earnings report. And at the earnings report, I think that we'll get a beat in terms of margins, and therefore a beat in terms of profits. We'll have a beat in terms of energy profits. So overall, I think it'll be a pretty good call. And then the real thing will be, what will Tesla continue? They've already restated, without even getting to earnings, they've already restated their 1.8 million. So maybe they'll make a more careful call for the end of the year. Maybe not, probably not actually. Anyway, but if we hit 1.8 million, that will be within expectations. I don't expect it to be any less than that. Then we have announcements pending on Mexico, Reno, India, and possibly multiple other giga and mega factories. This morning, some talk about putting in a Powerwall factory in India in addition to the gigafactory. We are expecting dojo updates. I would expect one at the earnings call, both in October and in January, maybe something in between, but those additional comments, and probably additional comments from Elon as he goes around and gives talks and whatnot. And then finally, potential licensing of FSD or the entire operating system to other OEMs. Elon says there's conversations taking place. We don't know how serious they are. It blows my mind that they're not lined up for these conversations. Okay. Oh, I forgot one. The competition. Let me respond to the competition in one sentence. We need more good competition. There it is. That's all you need. Because the competition will help Tesla sales, the TAM is huge. And so far, the competition is so meager that it doesn't really provide any kind of competition. And it's far from troubling. BYD is the only serious player out there. So I don't know. And there's nothing on the horizon. You've got a couple of people that are making some decent cars, but you don't have anybody that's making a competitive car so far. Because why? Because none of them have the capability to do the software. So yeah. Anyway, let me know in the comments. You'll probably think there's lots of competition. I don't know. Maybe you won't. But I really want to hear your comments. Okay, the toughest news is really about the third quarter. So all I want to know is, Kathy Wood says 2027. I'll take that. I'll take 2027. She's not counting a dollar for Optimus. She's not counting a dollar for Dojo, but she does see that 2/3 of that $2,000 will be because of FSD and Robotaxi. So anyway, I'm thinking Kathy Wood is right. I think we've seen the end of the 260 price point. I don't think you'll ever see that again. No, sure, there could be some reason. There could be some crazy news that comes out and it dips down again. But basically, this is not investment advice. Maybe your last chance to buy the stock for $259. All right. So hit like, hit subscribe, hit notify. If you like what I'm doing on this channel, let me have a little heart to heart. Okay. Here's a little heart to heart. I've been doing this for 9 months now, started December 1. So that's 9 months, right? I think it's 9 months. And believe me, it is beyond any of my expectations. Okay. I so appreciate you all. So many of you watch a lot of these videos, and so many of you have given me great comments, and you send me stuff and over on Patreon, you give me advice and direction, and it's phenomenal. I can't begin to tell you how much I'm enjoying doing this. It's just a joy to do it. Okay. I'm just not going to kid you. I do spend about 40 hours a week doing this. And I do have, 6 remaining clients. I have an Amazon business that I do. And those clients in my Amazon business, they take up another 20 something hours, 25, 26 hours a week. So I'm working about 65 hours a week. And, okay, old guys should still have to work hard, right? I'm not really looking for sympathy. I'm not looking for empathy. I don't care that I work 65 hours a week. Yeah, sure. I think I should eventually get that back, pare that back down to 50 or 45. That'd probably be the sweet spot. But I've always felt that I should get paid fairly for what I do. And I won't tell you the fair number. Maybe you'll think it's a fair number. Maybe you won't. But I don't think $27 an hour is the fair number. That is about what I would be receiving right now, just from where I'm sitting with advertising revenue from you guys being so lovely and coming in and watching me sometimes once a day. Some of you are watching 3 times a day. That advertising revenue is great. Please just keep that up. If that's what you can do, if that's how you can help the channel, just keep watching the channel. Hit the like button from time to time. Do comments. The comments are so helpful to me as well as to the algorithm. So $27 an hour, that's from advertising, and that also includes what I get from Patreon and what I get from book sales. Okay, so you add all that together, it's about $27 an hour based on a 40-hour week. Now, that would have been good. I would have been perfectly happy to make $27 an hour in my 20s. Before I got my law degree from UCLA, before I ran a $5 million company. Anyway, so I haven't made $27 an hour for a while. So I would be happy with double that. And can I tell you something? The little Cybertruck magnet sales have allowed me to double that. In fact, a little more than double that. And all of a sudden I'm going, okay, now I feel like I'm getting paid what I'm worth. But you guys aren't going to continue to buy more of them if I never mention them. So I'm not sure how often you want me to mention them. Say in the comments below. Should I bring it up once a day? Should I bring it up once a week? But those sales will make the difference. Now, maybe the Amazon sales will go crazy. The advertising should be starting today on Amazon, and maybe I'll sell dozens and hundreds and hundreds of those on Amazon, and that will make up the difference as well. And I will count all of that as coming from my YouTube effort, because it was a YouTube. One of the folks that watches this YouTube channel, he just out of the blue looked me up and said, "Hey, would you like to sell these?" So I'm going to count all that as income, but would really prefer, $50 an hour as kind of the number. Okay. And it's still way less than I've been earning years and years and years ago. I earned way more than that. So let me know what you think about this partly personal conversation. Maybe you think, Randy, you know what? Just enjoy life, enjoy your retirement, doing this lovely thing, because we know you're having such a good time doing it. Okay, that's all I got. Send the orders. You know where to send them. It's been fantastic talking to you. If you don't mind, I do want to pitch my little device here. I have these little devices for $25. You can't believe how cool this is. Look at how thick the stainless. I mean, holy mackerel! It comes in. It comes in a camo as well. It's a can opener. I mean, I'm sorry, not a can opener, a bottle opener. So you got your bottle opener here too, and it's got a magnet on the back, so you can slap it up on your fridge. I mean, is this good or what? So anyway, you just send $25 to my PayPal account. It's down in the information below. Just click on there. You can send it 20. Now, if you're out of the country, I got to charge you an extra $20 for freight. So, or if you join my Patreon, I'll give you one at the $10 level. I'll give you one for free.
Click the link below to get your paperback, Kindle, or audiobook now.